Hello, everyone. Good evening. Welcome to tonight's broadcast. As you can see, we're going to update you over the past few weeks as far as what's driving the markets fundamentally and technically. That is my email there, so as you have any questions, you're welcome to reach out. I'll go ahead and flip to the next slide quickly and just let you peruse that. And again, it's important to say, especially with leveraged products, but obviously with any trading vehicle, make sure that you do have trading plans, as there are no guarantees. We know now in these markets more than ever that things can change in an instant, and they can change drastically and move a forex pair or any market entity in a direction much longer that most people can stay solvent. So just want you to be aware of that these disclaimers are obviously important, and they're really about you. That's basically what your brokers are letting you know. That's why they're creating this education, is they want to have a long-term relationship with you. But it is up to you to make sure you're trading the appropriate size and obviously having an appropriate trading plan for each and every trade. So the outline, we'll do the fundamental analysis and do the 2-week catch-up. Then we'll move into technical analysis, looking at major trends, areas of support, areas of resistance with live market examples, and also touch on those always famous intermarket relationships that are providing some good trading edges for people who are trading intraday and also for people who are trading a little bit longer term. So let's discuss those current events and what they mean for us as traders and investors. We'll go into forexfactory.com, which you can link right from the Interbank FX website. We'll touch on CNBC, and then obviously you have Bloomberg TV and Bloomberg.com as great places to get some information. Obviously, your broker provides great education, and there's other market sites. So just going right into Bloomberg, I have it up right here. I was just looking at the futures to see what the Americas were looking like as I scroll down here. You can see where Asia's opening up, which is down. Europe is pointing to a pretty heavy downside bias, and that may change, obviously, before they open. And then the U.S. is opening right now flat, but that, again, may change depending on what happens overnight and tomorrow morning. So Bloomberg.com, overall, the homepage, just great macro stories to stay on top of. And then you can start to drill into Forex Factory. And again, like I said, you can link to this right from the Interbank FX website. But just getting a good idea of what's going on around the world for those different currency pairs that you're trading. This week has been pretty light overall. Next week is pretty light as well. I was working with a client earlier today, and we kind of just did a jump ahead to next week. Obviously, the big thing that you have to know is what's taking center stage. And right now what's taking center stage is not economic data such as trade balance, unemployment claims, inflation data, retail sales, jobs data, things like that. What's taking center stage obviously are much bigger macro events as far as regions of the world, countries, things, zones around the world, if you will. Such as the Eurozone. So it's a good idea to understand this, because someday we'll come back to this and we'll use this data to trade off of, but definitely over the past few months and maybe going forward, who knows how long, we're not paying attention to it like we normally do. But like I said, it's always good to know what the underlying activity is in the various economies that you may be trading out there. And the big one to keep an eye on, obviously, is the United States, because for the most part, when we're paying attention to normal economic activity, everybody's watching what the United States is doing. Again, I will check back for questions, so please use that questions function, and you can type in, and I'll be happy to answer those. So it helps everybody if you ask the question, because it could lead to other discussions. So anything's on the table tonight. Again, if it's something that's personal to your situation, I might say follow up with me via email. If it's something that's totally off from what we're talking about, I might let you know and just say, hey, follow up. But for the most part, most questions, I can at least grasp something from them that'll bring us into some topic that's pretty close to what we're talking about tonight. So overall, fundamentally, things have gotten okay, or gotten a little bit better since we last spoke as far as the United States economy is going. Claims, as far as jobless claims, have kind of steadied out, maybe even come down a little bit. We get that tomorrow. That's a Thursday number, so we get that every Thursday. But overall, they've kind of steadied. We're still spending. There's no doubt about that. Earnings were good this past quarter. As we know, the companies are flush with cash, so earnings were very, very good. And so that part of it, that is bullish for the markets. I've talked to a number of different money managers out there and portfolio managers, and they like, you know, the valuations with companies and stocks out there. So aside from the international news going on, they still think that there are good sectors out there, good companies out there, good stocks out there that they want to put money to work at. And as the markets dip, as we know, and we'll be able to see in just a moment when we look at the technicals, we know that the markets are being supported. We know that the buyers have obviously been winning out much, much more than the sellers. That's why we're moving to the upside, aside from today, basically. For weeks and weeks and weeks, we just keep cruising to the upside. All right, so that's kind of a fundamental catch-up. Again, the macro view going on around the world as far as the international events going on in Greece and then Italy, and who knows what's next. They're so big that it's hard really to talk about, but obviously when we get to the charts, we can understand how to play them, basically. So we did cover fundamental analysis. Let's move on to the next site. What are traders doing and what are investors doing with the fundamental news? Let's look at major trends, support, and resistance, and then again touch on those intermarket relationships. So let's just go into, you know, I usually set the stage with the equity markets, and October was a big, big month. The low in October to the high in October was a 17% move. Most of you know that the markets return in average over the past 30 years about 8 to 10%, depending on who you ask. So we did 17% in 1 month, again, with the super fund, you know, decision, and with Europe kind of still in crisis mode, we made that huge, huge, huge move. So we're kind of playing in this range right now. We have about 128 on the top in SPY and roughly 122 where we kind of closed just above today, kind of supporting us. So it'll be interesting to see what happens. I talked about this in my blog a lot. So again, if you guys are paying attention to what I'm writing, I'm trying to give you indications of what I'm seeing every single day in these webinars, act as an overall catch-up. But is this a left shoulder? Is this the head? Is this an extended and very ugly right shoulder? And the neckline is right here, and will we slice through it? Who knows? Overall, we have this huge move up, and we're sideways. We're consolidating sideways, very, very, very close to the high. And if anything gets solved overseas, we could blast up to the upside and be revisiting the 135 area from earlier this summer. And it'll be interesting to see what we do when we get there. But we're very much in reach of that area from just earlier, like I said, this summer, 4 or 5 months ago. So that's the picture in the overall broad equity markets, the S&P 500. And let's move over into the forex markets. So here we have, and I'll just bring up the pound and the euro, which have kind of been telling a little bit different stories. The pound has kind of been a safe haven, that the dollar has really been the safe haven when equity markets go to the downside, but lately the pound has been performing the best out of a lot of currencies against the dollar. So let's start, well, since everything is going on in the euro region, let's start with the euro. Okay, so in October, equities went up 17%. In October, foreign currencies, the euro gained against the United States dollar from about 131-ish all the way up to about 142, a big, big move to the upside. And then things started at the end of October, early November. Things started to come out with Greece and Italy, obviously. And the euro drops drastically, kind of consolidated after Greece, but really couldn't rally much and then dropped again. So we can do a couple Fibonacci's. And you guys know that I love Fibonacci's. In 2 weeks, I'm going to do an intensive Fibonacci workshop, basically, as far as this webinar series goes. But here's the big move up, and then as Greece happened, we retraced down 50%, and then we kind of went sideways, and then Italy happens, and we retraced down now to the 61.8 mark, okay? I'm going to delete this, and I'm going to kind of give you my story, basically. You guys know that I love these intermarket relationships. So with Europe being, you know, unsettled, with the markets moving very high, as I'm trading, and I have a bias, but also I have a different bias sometimes as I'm managing money and helping clients who are investing large sums of money and they want to protect those equity investments in IRAs and pension plans and things like that. So if we go down to a smaller time frame here, this is that first down move off of Greece. When we moved down, as you can see, we consolidated sideways very, very close to the lows. Just like I said, the S&P is consolidating very, very close to its highs. Will it blast out to the upside? This is consolidating 38% retracement close to its lows. All of a sudden, we get some more bad news out of Italy, and boom, we blast through the lows. So you have a big move down, small sideways retracement, 38%, and then another big move down. All right? Let's just go over now so you can see the difference, because the euro obviously is affected much more so by Italy and Greece than the pound is. Let me show you why I said the pound has kind of been strong overall. Even though it's gotten down against the dollar, it's much stronger against the euro as of late. So on a daily chart, here's that huge move up, okay, in October as equities move up. And now that we have Greece, we fall off. We only fall off 23%. Now we have Italy, and we only fall off 23%. Remember, the euro has retraced 61% of its October up move. The pound has only retraced about 23%. Is this a double top, and we're going to fall through? I don't really know. But the point is, when Greece happened, the euro fell off, consolidated sideways, and then went lower. When Greece happened, the pound fell off, boom, right back up to its highs, and now fell off again. So if I bring this down to a smaller time frame, the pound is basically just in one big kind of sideways range, okay? I'm going to shrink it down even more. So basically here it is. This is about 3 weeks, the 24th of October to the 10th of November, and look at it. It's got roughly 61.50 at the top, and it's got roughly 59-ish on the bottom. So we came down today, again, right to 59, and we're hanging right on it. So again, if you're going to do your Fibonacci's on today's move, because Fibonacci's work for any time frame, here's the big move down today, and here's the sideways consolidation very near the low. So given that, you would expect us to go down. But a lot of it depends on international news and what we're going to hear. And also, you have to look back at past history and say, support at 59. Support at just below 59, support just below 59, support just below 59, support just below 59. So are there enough buyers to support it again that we get another run up, or is Italy and something, another shoe to drop enough for the safe haven buying to buy into the dollar more so and weaken the pound a little bit more so? You guys, some of you guys are following me on Interbank FX's Connect site. Some of you guys follow me on my blog, and I just make sure that with this new social connectivity and stuff like that, people can follow each other's trades and things like that. And I make sure that I don't want people following my trades. I make that very clear, because you don't know why I'm making trades. I might be making trades for an intraday trade. I might be making trades to hedge something. So everybody out there, all of you listening tonight, are in different places in your life, different account sizes, different goals with foreign currencies. Again, some are intraday trading, some are using it to protect big portfolios and seeing these big relationships I'm talking about. So just make sure that before you go and follow anyone or listen to anyone too closely, you do a gut check, find out who you are, and what your strategies and what will fit your time frame and time available to trade and account size and risk tolerances and goals and things like that. Do that gut check first. That's something I do with all of my clients. Is I do a pretty in-depth interview to find out what they're looking for, make sure their goals are realistic given their account size and time and market conditions and things like that. And if nothing else, it gives them a good sense of what is achievable given their situation. So if you don't understand that and you're just trading and you're trading various sizes and you're just kind of guessing out there, it can be deadly. And that's basically what I'm offering. Is you're welcome to email me, and I can help you through that really, really easy interview process where I ask you some kind of key questions where you get a better handle of what would work for you. So very, very different picture overall in the euro and their weakness versus the pound. The pound, like I said, is kind of the safe haven. If we look at some of the other currencies over the same time frame, here's the Aussie dollar. Again, the huge run up in October when equities went up 17%. The Greece drop, sideways consolidation near the lows of that Greece drop, and then Italy, and we dropped to new lows. So maybe this is a head and shoulder. Left shoulder, head, right shoulder. I'm not really sure. Do we have more room to drop? Absolutely. That obviously depends on international events. Let's look at the New Zealand dollar on the same time frame. Huge move up against the United States dollar, and then we have the Greece drop, sideways consolidation near the lows, and then make a new low basically, or barely a new low, on the Italy news. Over here, flip things around because this is the US dollar versus the Canadian dollar, so we should be going up. So here's the United States dollar going up, and so going down, basically when the equities go up, the US dollar loses value. Then we have the Greece thing, and the United States dollar gains, sideways consolidation, Italy, and we have the big move up today again to basically a little bit of a new high. So lots and lots and lots of resistance basically in support. You're seeing these areas. So the dollar is fighting to get right to its highs right here, and previously it's been pushed back down. Is a dollar going to get stronger again now based on news overseas? So the dollar is at a major, major area against a lot of currencies of resistance where it can't get any stronger. And again, we don't know what's going to drive that. It's probably going to be news coming out of Europe. So it's very, very interesting to see it. Just like the stock market is at a very nice area of support, that puts the dollar at a nice area of resistance. They're working very, very nicely together. These are these crucial intermarket relationships that I use that I think are very important for these trading edges for you guys. So sliding through this, the PowerPoint here, just to review, we talked about major fundamental events which are coming every day. You know, they're like fireworks, they're like news bombs going off. That's why, again, you've got to know your trading situation very, very carefully. Most people who've been trading for a long, long, long time understand that these are volatile times, understand that things can happen at any moment that can move these leverage markets very, very far. And what they're doing is they're just being cautious. They're still entering the markets, but they don't need to enter with any serious size. They can enter in good specific locations, and if they're right, they can have a nice percentage return because things are volatile and moving, take off their trade, and move on to the next one. Most people aren't willing to sit for a long, long time in these trades, again, unless you're putting on big macro hedges in your hedging equity portfolios and things like that. Basically, it's just too volatile day to day to day to stay into things, and you've got to have very, very large accounts with very, very large stops to be able to try and make a large amount over 2, 3, 4, 5, 6, 7, 8 days. So if you're intraday trading and you have a profit, you book it, and then you wait for the next opportunity. You're in and out of the markets. There's no reason to be carrying day to day to day and carrying through this, as we call it, quote-unquote, event risk. So just keep that in mind, that there are great, great opportunities in here. You have to be trading with trading plans. You have to be realistic and say, hey, I just had a winner. I don't know what's going to happen 10 or 15 minutes from now. It might be late in the day. It might be towards the weekend, whatever it may be. Why would I be sitting around when I have a nice profit? I'm going to book it and move on to the next few hours or the next day or the next week, whatever it may be. Technical analysis, obviously we're seeing the trend. We're seeing the flight to quality, as they call it, where when things go bad around the world, the dollar starts to strengthen. Right now, the stock market is at a little bit area of support where they've accumulated it in the past, and that means the dollar is at some areas of resistance. And again, that's kind of proving to you those intermarket relationships provide some nice trading edges. So today I wrote on my daily article, basically, and I'll go here so you can see it. So again, as I mentioned, a couple weeks from now, we're going to talk about Fibonacci's. That'll be the main topic. Again, where can you find this education? These webinars get posted to YouTube just a few days after. So it just goes through compliance and then goes on to YouTube. So you can get information there. I post every day pretty much, depending on market activity, dailyforextradingedge.com. I write an article. So I did write an article today about my intraday trade. I'm also updating the markets intraday on that Connect site, as I mentioned, under the tag The Local Stakes. So some of you are following. You guys are welcome to follow me there. And then go ahead and email me if you have more specific questions. But let me just show you the intraday trade today. So we're going to take this Fibonacci off. And we're going to move from a longer-term view down to the shorter-term view. Let's take both of these off. So basically what I was looking at today is I had a bias. Obviously, the stock market started down huge, all right? And it was pretty easy to see that the trend was down in all currencies against the United States dollar. I usually don't start trading until most economic calendar news that I talked about on that Forex Factory website starts to roll off. So whether it's retail sales, initial claims that come on, you know, consumer sentiment, inflation data, that's all between 6:30 and 9, and 6:30 to 8 roughly my time, which is Mountain Time. So about 8:30 to 10-ish Eastern Time in the United States. So I let that roll off, and then I let the markets open up, the equity markets open up my time around 7:30, and then I give it a half hour, kind of see what's going on, and then I get into it. So, I get up, I do my research, I kind of start to look at equities, I look at my option positions, and then I start to hone in on my day trading for foreign currencies. So for foreign currencies, I only day trade 3 to 4 hours a day, that 8 a.m. window my time to about noon or 1 on the very busy days. Sometimes it could be as early as 8 to 9 or 10, if I find a winner and I'm ready to shut down. So I don't trade a lot. I'm looking for specific setups. So today, and again, we kind of have to account for the great platform we have here with Interbank FX, the MetaTrader 4 platform. So 1400 is going to be 8 a.m. my time. So my go time is around 1400. All right, so all of this action already happened. We dropped basically from 61 even to about 59-ish. Okay, we dropped 200 pips. And then we kind of hung in there, and we were starting to open up with the equity markets, and they hung in there. And the equity markets, the S&P was down about 35 points, then down 32 points, then down 30 points, then down 28 points, then down 25 points. So 10 points in the S&P is a major move. The S&P went from down 35 to down 25. And here we have the pound rallying. It rallies from 59 even to 59.50 roughly. And there's a pattern here. This is a nice double bottom. And chart patterns are great because they're measurable. So here's a double bottom that the bottoms are at 59 and the peak is around 59.25. So that's about 25 pips. And if a double bottom is going to be satisfied, it goes to this little peak level here. And then it goes 59 even to 59.25, and then it does that move again, 59.25, another 25 pips is 59.50 roughly. So basically, I put my Fibonacci on, and I was aware of that double bottom, and obviously my bias, my fundamental bias is to be a buyer of the United States dollar when it gets weak, as long as nothing gets solved overseas. So I watch it rally, I watch it satisfy this pattern, and I'm looking here at the 23% mark. I usually like something to rally a lot more because if I'm going to get bullish in the United States dollar, the more this goes up, the cheaper the United States dollar is going, I'm going to get a better deal. But I didn't think that we were going to get that cheap today just because today was a different day. It was a major news event driving us. So I was willing to go in a little bit earlier, use a chart pattern, use a Fibonacci, and get short in this area. And as an intraday trader, I risk 10 to 15 pips. I make 10 to 15 pips, and that was a trade. I think I got short around 59.60, and I put my stop around 59.70, 59.75, and I put my target at 59.35 or something like that. Or I'm sorry, 59.45, and that was basically it. Risk 10 or 12 to make about 15, and that was it. That was the trade. It didn't happen too fast. Kind of things were slowing down. But overall, I had the right theory going on because, as you can see, we just continue to go lower and sideways as the day went. And you know what the stock market did as the day went on, down 30, down 35, down 40, down 45 in the S&P. It kept going and going and going. So fundamentally, I knew which way I wanted to be. Technically, I used the charts to say where and why is a setup. I mean, I'm either going to have a winner or a loser. I have the appropriate amount of contracts on for this market for my account size, and I'm willing to take this loss right here to try and make this profit right here. And that was it. One trade, one winner. I watched the markets. Again, I start around 1400, and I didn't get in the trade until about 1600. So 2 hours I waited. I was in the trade for about 10 to 15 minutes, and that was it for the day. So it takes a lot of work. You guys have to realize you're up against the best of the best when you're making trades, and you have to make sure that you have a detailed trading plan. So that's just one example of something lining up. And you know what? If I had a loser on the trade, I would be explaining it to you just the same way I would have taken it, and I would have been okay with the loser. I did the best I could with the analysis that I had, and that's okay. So whether it was a winner or a loser, I'd be explaining the same exact setup. Fundamentally, I wanted to be long the dollar. Technically, I was just waiting for a place that lined up, and I had two nice technical reasons to do it. So that's tonight's webinar. Hopefully that was helpful to go through one of those trading examples. Again, really important, you guys. These markets are very violent, and you know you're dealing with leverage products. Just be very careful out there. Always have a trading plan. Always have stops in place. That's why this software is so cool, is I can enter that trade, and before it goes into the markets, I have my take profit and I have my stop loss all set up. So, take advantage of the technology that's come around in these platforms, and Interbank FX is let it do the work for you. You have to decide where you want to get in. You have to decide how many contracts you're willing to risk and how many you're going for. You have to deal with how many contracts you're actually going to enter with, but let the software help you as far as the take profit and stop loss. I've done a webinar that you can find on the YouTube page on the take profit and stop loss. It's crucial. I don't think you should be in these markets at all without those predefined, at least that predefined stop in there, so that it does the work for you to get out in case something happens. Again, the best laid plans can go awry at any moment, and we just have to be okay with it, not egotistical, not impatient, not angry about it. You guys have to be aware that even the best of the best are just taking a cautious approach to these markets and trading them well, but again, trading them with very, very secure, very planned out strategies, and they're willing to take that loss or that gain and move on to the next opportunity as they see it. So thank you very much for your attendance tonight. We had a very, very large crowd, a quiet crowd without questions, but a very, very large crowd nonetheless. Like I said, this will be up on the YouTube page for you to review over the next few days. Again, everything I said tonight is for educational purposes only. You guys have to understand that. No buy, hold, buy, sell, or hold recommendations or anything like that, as you know, strictly for education. If you guys have any questions on anything I've talked about, you have my email. Please follow up with me. And like I said, 2 weeks from tonight, we will be talking about Fibonacci retracements a little bit more in depth. So thank you very much, and be talking to you daily through the Locals Take on Interbank FX Connect, daily through Daily Forex Trading Edge, and then again in a couple weeks in the webinar. Have a good evening.